Payroll. So we're getting right into the second, well, the end of the first half of 2020. We're coming to the end of Q2 as well. So what will this mean for the job numbers and a supposedly recovering American economy as it stands at the moment? So let's get straight into the details and what we can expect this time around. Just share my screen for the presentation. So welcome once again, and thank you very much for joining me as we head into the NFP. So 30 minutes to go until the big reveal. And what will that mean for the likes of the American economy? And actually, where will this go for the next 6 months and for the next Fed's rate hike, which is supposedly going to happen shortly? So the Fed has said they're going to hike the rate, for the next few months until the end of the year, up to 7% possibly. So we'll see what happens with that. Also, I just want to let you know that on this webinar, there will be a special guest, Daniel, that will also be joining me shortly, roughly in about 20 minutes. Whilst I go through the presentation, he'll be showing us what the next rebound is for the American economy as well, and just what we can expect in the meantime. So any chat that you want to go through, any questions you want to ask, just please feel free as we go through. So just a quick risk disclaimer before we get into it, just to be sure that we are safe in the trading and making sure we are making the best investment decisions as well. So foreign exchange trading and investment in derivatives, CFDs, can be highly speculative and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitute a solicitation for the purpose of the purchase or sale of any commodity, security, or investment, nor should it serve as a basis for any investment decision. Orbex Limited is not guaranteed accuracy or completeness or information or any analysis supplied. So without further ado, let's just see what we're looking at for the last round then. So previously, analysts do expect a decrease from 428,000 to 325,000. That has actually been amended from before. It was 320,000, then up to 325,000. So these numbers can actually be a little bit amended as well as we get into closer in towards the NFP as it's starting. So on Monday, for example, it's a different figure. Now we're down to roughly about 325,000, even though it is another figure to the downside. If we look on this graph as well, you know, we did have this, you could say it's a double bottom here or double top, 428,000 for both revised for the last two readings. We are going to drop again, allegedly, but it is still in positive territory. It is still over 300,000. So it is something to keep an eye out for in that respect as well. So let's just see what's going to happen there. Unemployment is likely to drop slightly from 3.6% to 3.5%. Will that be significant though? Maybe not, maybe not. It might not be that that great, let's say. It has actually been since the start of the pandemic, this kind of same figure, apart from when it went a bit crazy when the pandemic just started. But for the last few months, it has been around 3.6, 3.5 area as well. And now we're just looking at the previous round. So we had this big jump at 714,000, and that was February, so that was January's reading. Don't forget, this is for the previous month before that. And now we are looking to see what's going to happen next. So with that being said, we'll see if we get another good indication of this recovering American economy. The euro dollar has been very, very buoyant at the moment. We'll look at some of the big currency pairs shortly, but we'll see what the opportunities are as well, very most importantly in that respect. So looking at the other information as well, we just take this kind of information to give us a little bit of a clearer picture as to where the American economy is going. We don't just want to look at the NFP only. We want to look at other job figures. We want to look at ADP, private jobs. We want to look at retail sales, inflation data. Daniel, who is going to be joining us shortly, will also give us another idea as well as to what is actually happening in that respect as well. So very exciting times coming up. So US weekly jobless claims are still hovering around 200,000. You know, we did drop below the 200,000, roughly 170, 180,000 a week, but it is a stark reminder of where we were. We were actually up to 1 million at the height of the pandemic. So these weekly jobless claims keep on dropping and dropping and dropping. They have started to kind of find their home around the 200,000 area. You know, if you look back to the beginning of the year, we had a drop below 200,000, another rise. Since then, it has been very, very choppy. We've risen above back over 200,000, but now we are moving to the downside once again. So it's something to keep an eye on as well. And the good thing about this piece of information is it's weekly. You don't have to wait every month for this kind of data. It's every week. So something else to look out for. Inflation, where do we start with inflation? You know, we're still up to 40-year highs. It has eased slightly on the last reading, back down to 8.3% from 8.5%. However, it's still at elevated levels. And this is something that's very, very concerning for a lot of investors and traders. Consumers as well. It's affecting the CPI data. It's affecting quite a lot of data, actually. And obviously, with oil and gas spiraling out of control recently, we are looking at inflation if it's going to come down anytime soon. With the Fed hiking rates every so often now, it doesn't really seem to have been put into place. The problem is with the Fed announcing the hiking rates at the end of the year, this has already been priced in a lot of markets, so it's not really a surprise. What would be a surprise is the next ECB meeting, which is next week, and the next ECB interest rate decision, if that's going to be hiked, because currently it's at 0%. Apparently the predicted figure is still at 0%, but if that gets bumped up to 0.20, 25 basis points, 50 basis points, whatever it may be, this could cause a big shake in the market. So keep an eye on that news next Wednesday, I believe, or Thursday, but check your economic calendar because that could be a big one. So we're still looking at annual inflation being heightened, being really, really sky high. Will that have any effect on this NFP as we see an easing of the figure? However, it doesn't mean that we are going to see any sign of normality yet. So we'll see what happens as we go on. So as we're on the presentation, just want to see another look at what's going on. So retail sales as well in the US, it's saying it increased to 0.9%, but if you look at the previous readings for the previous months, we are actually on a decline. But the good thing is, the positive thing is, it is in positive territory. As you can see here from last year and in December as well, we saw a decline at minus figure, which was unprecedented. It's very, very bad. But obviously in America, you have the holiday season at the turn of the year. The retail sales are for the previous month's data. So when we see January's, it means it's for December's. So naturally, there's going to be quite a big retail sales shift due to the fact that there is the holiday season. And then we've seen a bit of a decline, but numbers are still positive, which is quite good for the economy. You know, the Fed do look at all these different pros and cons, leaders and laggards in the finance world to see what their next move is going to be. Obviously, they are going to start hiking rates even further. However, it could mean they could do it sooner, or they could leave it a little bit longer. So as I said, looking to get back up to 7% by the end of the year. At the moment, it has been hiked a couple of times. So we'll see what is next in store for that. Private businesses, very, very disappointing for the ADP figures. They missed expectations at only 128,000 jobs being added. And this was the lowest since April of 2020. So still looking at the start of the pandemic figures, but ADP data is very, very important. You know, you've got a lot of private businesses trying to hire workers, but at the moment, as you can see, the lowest reading for quite a long time. And we had this big push at the end of the year. A lot of jobs are being created at the holiday season periods for in America, especially. So after the holiday period season, this is the time that we want to start seeing good figures. But at the moment, unfortunately, we are not. You know, the last three readings are under 300,000. So this has been very, very detrimental as well. So we'll see what is in store in that respect as well. So we've just got how to protect your risk capital. Just a few little hints or tips you could say at what we can look at as we go into the NFP, or not trade the NFP at all. You know, it is actually up to you if you want to just see how the NFP goes. If this is your first NFP, then it's more interesting to see how it plays out, what the good opportunities would be, and obviously what the negative impact would be if the market does go a bit crazy. So basically, The first point is avoid trading during the NFP if you're not comfortable with high volatility. The whipsaw effect could lead to losses that exceed profits. So what does that mean? So let me open my MT4 platform. So if we go to, a good example would be pound dollar, which is also known as cable. We've seen in the last session, we saw a drop of about 125 pips, 140 pips. And if we just zoom in, just bear with me 1 second. So if we zoom into that particular area, so if this was the NFP, for example, and you had these big candlesticks to the downside, very, very fast moving market, the whipsaw effect means that the next candle could open at this level here, roughly about here, and then the next price could be up here. So it could just go boom, boom, or bang, bang, whichever one you want to have. So we are looking at a price here and a price here. So it doesn't mean that all this candlestick is filled in because it's a full-bodied candlestick. It could mean that these prices could just be hitting here, here, and maybe one in the middle, and then slowly the candlestick will start filling up with prices. So this is what the whipsaw effect means. It means that you might actually miss out on pricing, because if you put in, let's say, a pending order where you want, I'll just delete these, where you want the price to open at let's say 125.702, and the whipsaw effect means that the price opened here and then the next available price was up here, then this price is not in the market at the moment. So your pending order would be invalidated. It would miss the price, and then it would take the price at the next best available order price, which would be down here. So this is what I mean about whipsaw effects. It can be very, very volatile, very, very precarious to trade on the NFP if the market is going a bit crazy. So just bear that in mind. And if this was, let's just look on the minute charts, it might be a little bit more easier to see. So I'll just scroll. Oh, we're here now. So as you can see here, this is 1 minute. So look how big this candlestick is, and look how much it has moved in 1 minute. So 125.686, and the low price there was 125.640. So quite a big pip difference in just 1 minute of candlesticks, and this is very true to a big trade, big fundamental news impact release, a big, quite a high one. So as I said, you could have an order here, and the first price is here. Your price would not be taken here. It would be taken at the next best available price. Whether it's a buy or a sell, if you've got a sell order here, then it would be very beneficial because you would have got more pips on that trade. However, if it's a buy position and the market's moving lower, then you could miss out on those pips. So just be careful when you are trading the NFP. Also, apply protective stop losses and take profit risk management measures in order to bypass emotional hurdles. So we've all been there. We've all got the emotional hurdles in our way when we're trying to put in take profits or stop losses. Just try and be sensible, make sure that it is realistic, and you don't go too far out for take profit or the stop loss as well. So number 3, close out all positions, if any, ahead of the release to move away from high volatility risks. So this touches on point number 1. If you don't want to get involved in the NFP, better to close out all positions ahead of the NFP. So we can move away from high volatility risks. Just been asked about gold. We'll be looking at the charts shortly when Daniel comes on, but let's just take a look at gold because you've asked me. And if you ask, thou shalt receive. And look what we've seen on gold recently. Well, for me, we did have a test. I'll just put it out to the 4-hour chart. We were looking at a test at the 1900 handle. This is where I was looking like it was going to go because we broke the last resistance level. However, it wasn't broken for very long, and now we've traded below that at the 1869, 1870 area. So with that being said, now if we can hold above this 1870 area, I would expect another push to the 1900 handle. The reason why we're looking at the 1900 handle is because it's a very big psychological area. It hasn't been reached for quite some time now. If we go back here, almost a month of trading below this 1900 handle. And when we broke through it and we confirmed the move through it, you can see here that we had a drop of, nearly $1,000, which is quite significant. We went down to 1790 approximately. We're at 1890 or 1866, so $1,000 move to the downside. And that wasn't really a big time difference. The 5th of May roughly to about the 16th. So you're looking at less than 2 weeks, roughly about 10 days that we've moved $1,000 to the downside. And it is actually quite significant. Sorry, $100 to the downside. So it is actually quite significant as well. And just been asked if we can analyze silver as well. Yep, sure. I mean, it was looking like it was going in this similar direction, but let's get it in the chart so we can see it and analyze to see what the next move is for silver. So as you can see, it is similar at the moment to gold, in the sense that if we just zoom in a bit, go to 4 hour like we have done with gold. As you can see here, the only difference was that we had this kind of false spike here. I'll just zoom in so it's a little bit easier to see. We had a bit of a false spike here. So this move above the 22, just give you the top of that. So we're roughly going for 22.40. It was a little bit of a false break here, and then we had a move to the downside. But since then, we have started capitalizing. Bulls have been in ascension, and we are now looking to see what the next move is. If it could hold above this false spike here, it would realize that the previous one wasn't false, and it actually was confirmed that it was another test to the upside. So psychological levels, you're looking at, the $24, $25 area, as we are looking with gold as well. We are looking to see another move to the upside. Things are getting a little bit more generous with the commodities, especially with the metals, because of the Russia-Ukraine situation. People are moving back into oil now, back into gold and silver, a little bit more of a safe haven asset. So we'll see if that comes into fruition. But we'll actually, gold and silver are moving in tandem. As I said, I've got them on the 4 hour chart. Just zoom them in a bit. As you can see here, it is looking pretty much like we are together with this, with gold and silver. So let's just move these together so you can see a little bit better. And as you can see, just zoom out a little bit. Oh, let's zoom it in. So as you can see here, move to the upside, move to the upside. Then we had this detrimental downturn, a little bit more choppy with gold. However, the downturn did come into fruition, and then another move to the upside, another move to the upside. So now we are just seeing again if these breaks are false spikes, or we're going to see confirmation and a move to the upside. So we'll see if that comes into fruition. I hope I answered some of your questions. As I said, Daniel, our other market analyst, will be on shortly, and we'll discuss more of the currencies as well. So just quickly going on with the protected of risk capital, we are hedging positions, if any, ahead of the release. Hedging can be a good strategy. However, it can also be risky. It doesn't mean that you're going to not get stopped out, because if you are hedging one lot on the buy and one lot on the sell, if the market goes crazy in one direction, you could actually still be stopped out. So it doesn't mean that it is actually protecting both legs. So just be careful of that as well. Number 5, if you're eager to trade despite the warnings, do let the market calm down, because there is heated environment after the NFP has been released, or any high impact fundamental news event. So basically, if you are looking to just trade a normal standard day or hour without any high impact news events, do let the market calm down, because there could be, like number 1, whipsaw effects after the NFP. So that could actually be a bit detrimental as well. And number 6, let's analyze the post data release. Any directional trade is at risk of reversal despite the NFP being over. So this touches on number 5 as well. Make sure that after the news event, not just the NFP, but the news event is over, that you see that the markets have calmed down. There is no surprises in store, and in doing so, you are not having any risk capital being at risk, basically. So let's just go back to the charts then before Daniel comes on, and we'll just see what we can muster up and see the opportunities at the moment. So I'll just zoom out on cable. So euro dollar, I want to just actually have this as a main spread, because if we look on the daily chart, as you can see, the dissension in euro dollar, very, very strong dollar. However, since the European Union, we had a bounce back with the euro, but the European Union the last couple of days said they're going to start phasing out 90% of Russian imports, Russian oil imports by the end of the year. We have now seen another move to the downside. That was this big bearish candle here. But as you can see, we have had a swing reversal, and now prices are just waiting to see if we can break this previous double top that we had at the 107.78. We were looking at 108 on the handle there, on the psychological handle, sorry, to see if we can get any more upside. However, we are now looking likely that we are at another test level at that particular level there. So this will be very, very interesting if this can keep on pushing higher, and then we can get a good confirmation. A lot of people are asking me about the Dow on the chat as well. So let's just have a quick look on the Dow. So the Dow has been a little bit choppy. If we look on the daily chart, you can see this very choppy motion. And now we've got to move back to the downside, but and move back up to the upside. So if we can put some kind of chart on this. So, you know, we've got a very big descending chart at the moment. However, very, very big spikes to the downside. You know, these are very unpredictable. We don't want to really get into these big spikes because it could actually lead to a lot of capital being at risk. What we're looking at now for the Dow is if we can jump up by 500 to 600 points approximately, which isn't unheard of in a trading session, we can see possibly, so let's bring it back to a weekly chart. As you can see here, a very, very detrimental downturn in the meantime. However, we are now looking if there's possibly any support here. There's very big levels here at the moment, but we'll see if that can come into fruition as well. So Daniel is actually about to join me, so I'll have to put my headphones on to hear him. And we'll see. Hi, Daniel, can you hear me?
Oh, hey, yeah. I was just getting my platform up.
Okay, that's great. Well, thanks for joining me. I was just taking our viewers through a few of the charts. I've done my presentation just to see what the previous readings were and also what is expected for this time around. So we've touched on retail sales, inflation, you know, the usual things to take into account when we're looking at jobs. So I just wanted to touch on inflation with yourself, Daniel, because you're quite into this kind of inflation embargo, let's say, that's been on America for a while. So it's kind of eased off at 8.3%. This is year on year, but it is still at elevated levels. So how do you see inflation going, and what can the Fed do about it for the rest of the year?
Oh, yeah, that's actually the important aspect of the discussion that we're having right now with the data that's coming out, because you know, inflation really is what's going to define policy. And really, the Fed really isn't paying all that much attention now to the labor market, you know, because they see that unemployment is down to, you know, structural levels. So this is again same thing that was similar to happen last time. And so now that we had inflation coming down a little bit, it might be the first sign that, you know, it might have been peaked in the effects. The Fed is starting to have some effect with their policy. But of course, you know, you can't really say there's a trend if you only have 2 data points. And so far we only had the highest, you know, inflation since, when was it, 1982 or something like that?
Yeah, it's 40 years now. Yeah.
Yeah. So and then go down from that, you know, 3 decimal points isn't all that much of a difference. So I guess we're going to have to really see what the inflation comes out. I think it's next week we get the week after we get GDP, the inflation rate from the United States again.
Yeah, I think it's a couple of weeks' time. Yeah, so we'll see what happens.
And
with that.
then we have the Fed meeting at the end of the month. So there's still a bit of time for the market to digest the data that's coming out.
Yeah, exactly. So with the NFP figure kind of mixed into that, do you see it as kind of a leading indicator or possibly a laggard indicator? Do you see maybe whatever the number is, if it does come in at, you know, it was 428,000 last time, if it's 325,000 this time, or just under the previous reading, is it that detrimental, or is it still a good sign that there are jobs being added?
Oh yeah, well I think it's a little like the headline, of course, numbers of course important, but I think there's a little bit of more complication there, because what's really kind of the big deal isn't, well, I mean, of course, if you're creating jobs, then of course there's going to be increased demand, and then but the real issue is whether wages are going up. And so since wages have been going up at about 5 something percent, and we have inflation going up at above 8%, there's an offset there. So you have a destruction in consumer demand, but that also means you don't have that wage price spiral that the Fed is really worried about. So as long as we get that's why probably the hourly earnings figure is going to be more important for the market. But I don't know if we have maybe I had a slight excursion that I wanted to go on for a second there, that there's a problem within, problem might not be the right word, issue
Issue,
with
yeah.
yeah, with the U.S. Market. I mean, with the unemployment situation in the United States, because it's not really even. There's a high level of unemployment in certain areas, and there's a low level unemployment in other areas, and this really isn't being taken into account,
Yeah.
because you have certain because there's. I think the last measure was there was over 11 million jobs that were open. I don't remember the exact figure, but it was over 11 million, and it's over 6 million people that are looking for jobs. So there's
Yeah.
essentially 5 million jobs that are open that need someone to work there, but no one's showing up.
Yeah.
But you don't get this rise in wages so much because of the locations are different, because you have some states that have relatively high unemployment, such as New York and California, and then you have other Midwest states, southern states that have really low unemployment that's well below structural level. And so that the wage pressure really isn't there, and I don't think a lot of people are really taking that into consideration. So that might be why the Fed is doing what the Fed is doing, that might not necessarily make exactly all that much sense, as you have all these people talking about the potential of a recession coming along.
I was going to say, it's not exactly a realistic picture then of unemployment figures, if you think with the explanation you've just given on in that sense. I'm just looking.
That's a little bit of like personal opinion there, but
no, it's true.
take
Yeah,
it
if
with a
you got,
grain of
because
salt.
a lot of people forget how big America is, and obviously if you've
Yeah.
got different states having different unemployments, and then you got the Fed just giving an overall figure of the whole country, or the government statistics, then yeah, it isn't really an accurate picture of what's being painted with the unemployment scene. So I'm just looking on the calendar at the moment. Yeah, we've got the unemployment figure as well coming to us. So from 3.6 predicted to 3.5%.
It's kind of a technical adjustment, really. You get
Yeah,
the average. Like, I mean, you could have rounding, a little bit of rounding there, probably.
exactly.
Yeah.
We're having average hourly earnings as well. Not too much in the way of movement in there as well. So, with people probably still trying to claim unemployment benefits or benefits from the government, like you said, we had 11 million jobs roughly empty, people that want to be employed, but only 6 million people actually applying. So there is a vast difference there as well. So it could be.
There's a little bit of concern that this time around the NFP will be quite a bit lower, because over the last 3 weeks, it was, or 4 weeks, one of those two, we had the number of people applying for unemployment going up, which could be a sign that the NFP isn't going to be doing so well. So the range, if let me check a second, what was the range? It's 225 to 440. That's the range that they were looking for. So if we get a result outside of that, it would take everyone by surprise.
Yeah,
They
definitely,
would get a bigger reaction there.
So I just want to share my screen for my MT4 demo account with Orbex, and I was just before you came on, I was just looking at the euro dollar, because we saw such a detrimental downturn, a very strong dollar for quite a while. And this was going from the end, well, roughly about the end of May, but we saw a little bit of an uptick, because these levels here were last seen at the end of 2016 when we hit the 103 level, and then we saw a move of like 2,000 pips to the upside. So now a lot of our traders are wondering, is this going to happen again, or are we going to see, as we've seen here, another move to the upside, but then a correction and another possible test at the 103 handle?
Well, I think a lot of that also goes back to monetary policy, because I think the portion moving up there should coincide with this a lot of talk from the ECB about raising interest rates.
Yeah,
because the ECB is finally getting around to doing something, and
exactly.
and also the Fed has already done well. Presumably, everyone sort of expects it to raise rates by 50 basis points at the next meeting. So then, at some point, they'll start doing a pause, and the ECB is going to potentially keep ramping up. So then you'll get that the gap will start closing there, and so that we could see we could see it moving a little bit higher as there's a bit of offset, because the Fed started hiking sooner than the ECB, and then we'll see because the inflation rate in the European Union is like 7%. It's only like a percentage point difference between the United States, and still the ECB is still out buying bonds. So it's a little bit kind of different.
Yeah, it's like someone stop them.
Yeah.
Okay, Daniel. Just looking now. So the NFP is coming through, and it's at 390,000. Sorry, 333,000 new jobs.
So a little bit above expectations. Cool.
It is, yeah. Let me just double check that. No, sorry, 390,000. I correct myself. Yeah, 390,000. So above expectation, but just below the last reading. So it is not a bad one, not a bad reading. We've had spikes on the dollar pairs for a slight movement. I'll just put these on the 30-minute chart so it's a little bit easier to see.
I expect the dollar got a little bit stronger after that because
it did. We've seen this. We'll go to
the Fed.
Yeah, exactly. We'll go to euro dollar at the moment. So as you can see, a spike down roughly about 15 pips, but now we've retraced pretty much straight away. So not too much in the way of surprises. The unemployment rate came in at 3.6%, so it didn't actually change from the last reading. But again, like you said, it's like a technical figure, not something really priced in there. And we're just looking at private non-farm payrolls as well. Not too much divergence. 333,000 that came in. Expectations of 325,000. So not too much in the way of many surprises. Could you say that, okay, 390,000 new jobs added versus 325,000 expected? Could you say that was slightly surprising, or would you say it's kind of a normality?
It seems to be kind of pretty much in the. I mean, it was in
the range,
pretty much, and it's not terribly surprising. It's kind of a meh number, as we can see how the market's reacting to. The
bit of an anticlimax.
I was also looking to see if what the revisions were, and there's also just a slightly higher revision to the prior month, because sometimes that can mess it up a little bit to change the perspective. No, it seems to be pretty much in line with what would be expected, and that would generally kind of confirm that the Fed is going to raise rates by 50 basis points the next time. So that's probably what everyone's already pricing in. That's, you get a. I would expect the dollar to get a little bit stronger up until the next Fed meeting, unless we get some kind of surprise from other bits of data, like the inflation rate or something like that comes along.
Yeah, I think the ECB press conference next week and the inflation rate, if they don't do anything, then we could see a stronger dollar up until the Fed's result as well. But with the ECB, they could throw a little bit of a spanner in the works, as the saying goes, or a little bit of a surprise, and hopefully that could spear on the euro a little bit, because it's looking quite degraded at the moment. I'll just bring it back to a 4-hour chart. Let's go daily chart. So as you can see, it's trying to pick up some momentum, but it's been weighed down heavily by a lot of dollar news. But like you said, with the Fed announcing from the beginning of the year they're raising hikes, it is pretty much priced in, and that's pretty much what we've seen for the most of the last quarter, let's say, with the euro dollar being suppressed. If we just take a look on cable as well, because just go on the daily chart for cable. It was moving in tandem with the euro dollar, as you can see, a little bit more sideways move. But we had a pickup recently, like the euro dollar, but then we've been weighed down slightly. So I think the cable and euro dollar are things to watch. So if one does move, the other one is likely to move as well in the same direction. So this could be a good opportunity for a lot of traders as well.
And also there's that thing with Bailey was talking about the potential of recession. So there's a little bit more worries about how the economy in the UK is going to perform, which might be just a matter of being a little bit more transparency, because the British authorities have been talking about the potential of recession, whereas in Europe they haven't been talking about it, but their economies are kind of the same and they're having similar data. So it just might be a matter that of sentiment. So you could then probably get a correction, and the two of them end up lining up.
Yeah, exactly. I mean, I just wanted to pull the two charts together, and they're pretty much mirror images at the moment. So we'll just wait and see. Yeah, the British central bank as well, because even though Brexit has transpired, Britain is still heavily dependent on the EU, and obviously the EU was heavily dependent for oil and gas on Russia. So with the EU recently saying that 90% of will be phased out from their Russian oil imports a few days ago, we'll have to wait and see where the EU is going to get this extra oil that it was getting from Russia. America did say it was going to lend a hand and help out, but obviously with the gas pipes and the pipelines that are already installed going into Europe, obviously it's a lot easier to get from Russia than it is from America. So do you see oil probably spiraling a little bit out of control in the next few months?
Probably. I mean, there has to be a general shift in if most countries are going to move away from Russia. Well, realistically, it's mostly like the West that's moving away from Russia, and then there's a whole bunch of other countries that really aren't taking sides in it.
Yeah.
And so that might mean that Russia will then sell to those countries, and those countries which are currently buying from other producers, for example, in the Middle East, Saudi Arabia, in Iraq, those countries might then start exporting to Europe at a little bit higher price, and so you get this shift in where the oil is going, and whenever you get some kind of structural change like that, you get higher prices, which is a little bit unfortunate for me if I'm considering buying another car.
Exactly. Yeah. You have to think twice now.
Yeah, I'm going to be going for a smaller car for now.
Yeah, a bicycle is probably a bit more,
that
cost
too.
effective.
Yeah, if it weren't for the rain, I'd probably be definitely considering a bike.
Yeah.
But on the other thing, it should be maybe however long it'll take to readjust, but then presumably get back in line. And then of course we had the OPEC was it yesterday. They agreed to increase production momentarily, but it was kind of just more another technical shift. And so then at the next meeting, maybe we'll see if they actually do start increasing production, which might finally bring the prices down.
Well, yeah, we've had heard a lot of things from OPEC in the last few months, but nothing's really transpired like they're going to really, really help out, and prices will start going lower. So it'll be interesting as we move into the second half of the year. We've nearly completed the first half already. As we go into the second half, to see where oil will go, and natural gas as well, because that's kind of hitting lofty highs as well, especially in America. So just a quick recap on the charts. We are looking at a more progressive move for dollar at the moment. So let's just quickly take a look at what euro dollar has done. So we're moving about 20 pips. Still not really a big juicy performer. 20, 25 pips isn't really something to get excited about. However, it is looking like, dollar yen, nearly 40 pips. It is looking in general that the dollar is outweighing a lot of its main competitors at the moment, would you say?
Yeah, that's why I think there might be like a little bit of underlying data there that's now giving it like a second wind, because labor force participation is flat in line. You had that little bit revision. It increased by 20,000 for the prior month, so you have to add that to the current. What was it, 390? It was 390. So effectively, it's 410. So that's really close to the top of the range. So once you get all the little bits and pieces coming out, it does come out to be a pretty positive result. The White House is probably going to be pretty happy with it, I should think.
Yeah, exactly. Well, yeah, and not only that, you have to think about the next 6 months for the American economy, and also what is going to be in store possibly for the US index. I just want to touch on that at the moment, because we saw this move to the upside that we haven't seen in about 20 years, roughly, to the 105 area. And now we are looking, it did have a bit of a sell-off, but we kept above the $100 handle. So, I mean, the US index, because it measures a basket of the European currencies, a few currencies, as well as euro and
the yen and
Swiss
pound.
krona and some other, and the pound. So, I mean, do you think that's going to have any big impact? Is the US index something to keep an eye out for as well?
Yeah, probably. But I think part of the reaction, there might have been a little bit stronger reaction here also because this morning or overnight, depending on where people are, you had Tesla come out saying that Elon Musk was going to pause hiring new people because he's worried about the economy, which came right after what Jamie Dimon said on Thursday, that there's a hurricane coming from the economy. So the market was already kind of like depressed and expecting a worse number, and then you get this better number. So stronger employment numbers will generally translate into expected increase in salaries. Aside from that thing that I mentioned previously about the separation of where the employment is. And then that would presumably mean that the Fed has more room or will be more incentivized to keep raising rates, which in turn would lead to suspect a stronger dollar going forward. So we probably want to be looking, but then of course you have the issue of the ECB finally getting in, and the ECB is the largest weight in the dollar basket. So there's always a little bit of a complication. You can't go and say, well, this happens and then everything's going to go straight in that direction, because
exactly. I think a lot of traders and investors are just waiting for the ECB's next move. Actually, they've been a bit muted, a little bit quiet, but we could see some surprises next week from them. But if things do stay as they are, then they really have to think about raising rates and clamping down this inflation, because like we just discussed about, they're not going to magically get all this oil and gas from somewhere else that they weren't getting from Russia as well. So
well, I mean, they're even not talking about doing anything at the next meeting. All the talk is about doing it in July. So it's like, come on, guys, get a little bit of move on. But,
get a move on. Yeah, with the Fed doing rate hikes like 2 or 3 times by then. We'll have to wait and see what comes into fruition for that. Okay, Daniel, great. So what I'll do is we'll just stop sharing for a second. Just want to bring you a little bit more into the focus then. So what would you say? We just touched upon the NFP figure was pretty good then, because it nearly matched the previous one of 428,000 new jobs added. Like you said,
once, the average, right?
Yeah, once they pick up all the bits and pieces, we're surely to go above 400,000 to about 410,000. So going forward, would you say the next NFP reading could be a better one than this one?
Ooh, that's always the big question. I think we'd have to keep a track of what happens with the applications for unemployment, because that's been going up recently, and then it might switch back down, and then we could. But I mean, to maintain the average, it's been how many months now? 4 or 5 months that it's been pretty much in the same range. So unless something drastically changes, I would kind of expect it to keep within that range, unless people get really disappointed or you get a large change in consumer sentiment. But there isn't much expected to change. Also, it's June. A lot of people are going to go on holiday, so you get a little bit of slower movement in the market. So I mean, that would be just a guess.
I mean, I wouldn't expect the NFP numbers all of a sudden to go to 600,000-700,000 for 1 month. It would probably most likely stay in the range of what it is at the moment.
I mean, they were actually earlier today, they were talking about the potential of it going the other direction, to go all the way down, because if NFP were to come in negative, that would be fantastic for the markets, and the markets would shoot really high. And so I guess there's a lot of people that are just waiting for the markets to go up, and that's why they're talking about that. But as long as the NFP sort of like keeps in this range that it's been maintaining, you'll get a little bit of an upside, but probably not a huge move. But
of course,
and then you're going to get people that really want to get the huge change, so that you could get that bump higher or the fade lower.
Of course. All right, Daniel, well, thanks for your insight on that, and thanks for joining me for this release of the NFP.
Well, thanks for the invitation.
No problem. Hope it's been enjoyable. It's always good to get a second person's insight, because obviously we look at the charts, we look at the previous data and the post data as well. So it's good to get a bit of a flavor of where the markets can go for our traders and what the opportunities are. Because, with every move in the market, there's always that opportunity, and we like our traders to have the best bang for their buck, let's say. When they're trading. So thanks again once again for joining me, and until next time, we'll speak again, and have a great month ahead.
Likewise, take good care of yourself.
Okay, take care. Bye for now.
Bye.
Okay, so that was Daniel. Thanks again for him to join me on this NFP voyage. What we'll do is we'll have a quick look at the charts once again. Any questions that you want to throw at me until the NFP webinar is over, please feel free to do so. And not only that, you can find me on the blog at orbex.com. I do a daily video about the markets. And also I have my next webinar about trading with harmonic patterns, and that is at Monday, and that's at 5 p.m. GMT. So don't miss that. And I'll be taking live questions on the presentation on the live webinar again. So what we want to do is just have a quick discussion about what's gone on, what the opportunities are, and where we can go. Obviously, we've had Daniel's insight, which has been very, very good. What we can see now is a very, very strong dollar going into the first or the last month before the second half of the year. Hope that wasn't too complicated to say. So June's reading, data, which is May's reading as well. We're seeing what can be done in the next few months. We've got the ECB press conference coming up next week. Very, very important. It could be very, very detrimental for the euro if nothing happens, because we could see another move to the downside for the euro dollar and possibly most of the dollar pairs as well. So as you can see here, very, very strong dollar across the board. We're now showing that the dollar can actually be very, very positive, and we'll have to see if there's any retracement. So like I said, on the protecting your risk capital, be careful for rebounds. The price could actually retrace fully. These are good opportunities as well as bad opportunities, so just keep an eye out for that. So that's all from this month's NFP. Thank you once again for joining me. And as I said, any questions, please direct them to our YouTube channel or our blog at orbex.com. And as I said, you can find me on Monday, 5 p.m. GMT for my next webinar, Trading Harmonics, so don't miss it. And you'll get all the information you need about harmonic patterns. So until then, bye for now and all the best. Good luck with trading. Bye.